What's up YouTube, it's Louis here. I hope you're all well. Today we're looking at Quant on the daily time frame. If you've been watching the Bitcoin videos over, basically since up here, we were saying on the Bitcoin video that, well, obviously the Quant chart's different, but on the Bitcoin chart, this area looked a lot like this area, so that's why we could call it. Of course, on the Quant chart's a bit different, but you're in the same resistance, and we were saying, even when we were here, and here everyone was flipping bullish because obviously look what it was doing, it was pumping crazy, and here as well after breaking out of our double bottom which I gave and the target being met. Unfortunately, I kept on saying even though we were up here and it looked very nice, we were still under resistance where it was previous support. Apologies if you can hear loud sounds outside, the bin men are just collecting the recycling. But yeah, unfortunately we did not hold the level we needed to, and that was the 618. This area here, we couldn't lose that wick, 106, and of course we lost it with yesterday's daily candle and we closed below that area. So yeah, after the day before printing a bullish hammer, for example. So we were in support. Well, technically we were ranging between this being support because we're in this box now, we're stuck within this box. So the inside bottom is support, the inside top is resistance. So technically, even though this was a bullish hammer, it was also appearing at resistance as well as support. So if it was just support, bullish hammer, but because it was at resistance as well, there was that chance it could be a hanging man. And when I see this, when I see a bullish candle or a bearish candle appearing both at support and resistance, in my eyes, I don't see it as the candle that it is. I just see it as an indecision candle. So for example, here, the bullish hammer, that's a bullish candlestick pattern. We see it at support, but unfortunately it's at resistance. And you can see to the left over here at resistance, we got another bullish hammer. But because it's at resistance, it's actually a hanging man. Because we were at the 150 psychological level, this was a hanging man and not a bullish hammer. And that's what's unfortunately happened here. Yes, we were at support, but we were also at resistance. So we can't call it either a bullish hammer or a hanging man. We don't know what it is. The market doesn't. Let the market decide. That's why I like to use the Bitcoin chart. But Bitcoin over the last 3 days keeps doing what it shouldn't. On the same day as this, we had a bullish hammer on Bitcoin. It went down, and we had a bearish engulfing yesterday. And then so that means we should go down today. And what's happened? We've actually gone up today. So it is very confusing, but all in all, the summary of the Bitcoin video and what's going to happen with Quant next is Bitcoin looks like it wants to continue rolling over. Make sure to go check out the video. And yeah, of course, like, subscribe and comment on this video and that one as well. Let's get this video to 50 likes. But yeah, if Bitcoin does continue rolling as anticipated, you can see you've now lost that 786. So we are creating the reversal wave. We're coming back down to test these lows down here around $92. This is what I'm personally anticipating now that we've lost the 786 and that wick at 106. So by losing the 111 support, it's not good signs whatsoever. You can see that was a 1 fib level way over here. Now that you're below the green line, you're actually on your way to the 1618 target, $70. However, that is one level below support. So technically, this is your bottom. This is support. This should be the floor. Yes, we have two reasons or two things acting as confluence for the fact that we could be coming down, or 3 reasons actually why we could be coming down to the 70. First of all, the 1618 after you lost the 111, which we've done. Then we have this Fibonacci from this wick to the high. That's the 1 fib level, 92. If we lose that, you got your 1618 target, 67. We've also got this head and shoulders target down at 70 from the weekly time frame. I'll just show you quickly. From the highest body there, back to the neckline. Wherever you break the neckline, that's where you place this line. So right there, just in line with that, as you can see. And then yeah, your target is about $70. So there are multiple reasons on this chart why we're going to go down. You can see with these impulses that we saw where everyone was getting bullish, still under the neck, 2 necklines, remember, don't forget. 150 psychological level as well as this ascending support, well, now resistance, but that's in and around $165. So that's pretty much it, guys. The only way to turn this around now and invalidate this rising wedge breakdown back down to around $92, which we're on our way to now, is to obviously get back above that wick. That's the only way to validate this, guys. Now, although, as I said, we've got 3 reasons why we're coming to 70, we might not go down there. even though I called it for it, yeah, the whole way down, still calling for it. It's still the target, but we know in trading we don't necessarily need to meet the target. And why I want to warn you of this is because the target is below this support, and what is support by definition? The floor. So as long as this is the floor, you won't go to 70. The moment we're closing below $83, that's when we go to 70. Until you close below 83, like, as long as that's not happening, you're not going to 70. So for the moment, yes, we're coming down. We've broken out of this rising wedge, which I called a few weeks back, and we're trying to meet the target back down at $92 to $95. Once that's done, the target will be met. Does that mean Does that mean it will stop running, going down? No. Obviously, when you meet a pattern's target, you tend to form a new pattern. So this is what I would personally anticipate. I would like to see us meet this target and then start to form a double bottom. You can see if we were to form a second leg here and start heading up, this could be the potential double bottom formation we've been waiting for. That would finally break us above this $150 resistance, which would be your neckline of the double bottom. We don't know where this second leg is, but if we're just going off the first leg, I can give you the target. And once we are above 150, you can see our next target would be back at this, where we had this impulse, literally to exact $235 would be the next target. But that is so far away, guys. Don't even think about that right now. So yeah, a lot more to do. That right there, that bullish pattern, this W, is hopium. It hasn't formed yet, hasn't broken out or validated itself. It only gets validated once you're above 150. So it's just something to be aware of going forward in the future. But yeah, for the moment, we're coming back down to here, and that's the only thing we should really be focusing on right now. Because yes, once you meet a pattern's target, it tends to form a pattern the opposite direction. It can easily form a pattern in as a continuation pattern in the direction it already was. So continuation of a downtrend. We just need to see what this next pattern is, but I believe it will start to form in and around the $92 to $95 area. Thank you guys for watching. Please like, subscribe, and comment. And if you're interested in me helping you achieve your trading goals, like doing the mentorship, I have one slot left, so get that as soon as possible if you're interested. You get the course included for free, as well as the chat for free until our 200k Bitcoin target. And yeah, I've got the course and the chat as well, separate if you want them. Thank you guys, I'll catch you in the next one, and as always, peace. So guys, here are the crypto packages. If you think you have what it takes to stay disciplined and consistent over the next 3 to 6 months, then I'm more than happy to help you 10x your learning curve. So you can already be a complete beginner, or you can be advanced. It doesn't matter. I'm here to turn you into a self-sufficient trader that doesn't need anyone else's guidance by the end of it. I even had to pay over £10,000 to get all this information. That includes scams, scam signals where I lost 3k, scam master account management where I lost 5k, scam pyramid scheme companies for bad courses. Then I found my mentor and I had to pay over $2,000 for just a 2-hour mentorship lesson. What you guys are getting for £650 is access to the chat until the top of the market. So if the top of the market is a year away, do 1 year times 40. So you're definitely getting your money's worth. You also get the course included in the mentorship, and I will actually not just do a 2-hour lesson with you. I will stay here for a month period to make sure that you become a self-sufficient trader by the end of it. So if you're interested in this, head over to my Twitter, Louis_crypto, to the pinned post and message me there. Thank you guys, and I'll catch you in the next one. Peace.